As of late, there's been a lot of talk as to whether or not Terra Luna is a Ponzi. But what do I think? Well, the short answer? Yes. The long answer? Yes, but hopefully not for long. But for starters, welcome to Crypto Saver. This past week, we saw Doan get into it with two individuals on Twitter by making a bet with them, a bet on Terra Luna. Now, the gist of that bet is that if by March 2nd, 2023, if Luna is above $85, Doan wins the bet. But if Luna is below $85, Doan loses that bet. And how much did Doan end up betting over the course of these two bets? About $11 million. Now, it is worth noting that $11 million compared to Doan's overall net worth, which if we look at his personal Terra wallet, it's in the billions. 11 million, it's really nothing. I mean, it's less than 1%. So it's not that substantial of a thing for us to kind of look at and be like, wow, Doan really believes in his project. But either way, it's pretty interesting that, all of this happened and that we kind of have this little drama for us to kind of look at. But it does prompt the question. Why are people labeling Terra Luna as a Ponzi? Well, to answer that, we want to look at the typical characteristics that come along with a Ponzi. So point one, it guarantees regular returns irrespective of the conditions prevailing in the economy. And then point two, it depends on the continuing flow of new investors' investment. Whenever there is a delay or time gap in finding new investors, this scheme crumbles. So these are the 2 points that we are going to be taking, and we are going to try and see if we can kind of attribute them to what we're currently seeing with Terra Luna. But first, I want us to cover the burning and minting process that typically occurs with UST and Luna, just so we kind of lay the foundation for this discussion. When there's high demand for UST and it goes off peg to the upside, then Luna is purchased and then burned for UST. And that UST is sold to apply down pressure on UST to bring it to the peg. On the flip side, if UST is unpegged to the downside, then UST is purchased, it's burned for Luna, and then that Luna is sold on the market. All of this is done on chain. It's typically done by arbitragers. So when we look at this, it's clear that Luna does benefit from the demand in UST. Well, why is there a demand in UST? Well, one very popular, famous savings app on Terra, which everybody should know at this point, is Anchor Protocol, a savings protocol that basically pays you a 19.5% interest rate, a stable rate. But here's the thing. Right now, as I make this video, the market cap for UST is just above $15 million. And here's where things get ugly. Out of that $15 million, 10.7 million of that is deposited into one dApp on Terra, which, you guessed it, is the Anchor Protocol. That's 71%. 71% of all the UST that's ever been minted is right now deposited with an Anchor and earning that 19.5% yield. Now, that concentration risk doesn't have to be a problem, but it is a problem when all that concentration risk is in a dApp that hasn't yet been proven to be sustainable. And Anchor is popular for the fact that it does pay that 19.5% interest rate no matter what, right? The idea is that Doan had for Anchor was that this is going to be the stable rate, it's not going to fluctuate, and this is how we are going to bring adoption to UST. But doesn't that remind you of point one of a Ponzi? When Anchor was first constructed, the idea was if there isn't enough money coming from the borrowers to pay the ones that are depositing money, well, then the yield reserve will kick in. It's just a pool of money set aside that Anchor can kind of go into and take to kind of fill the gap between the two. And during times when there's a lot of people borrowing and Anchor's collecting more than 19.5% from the interest it's collecting plus from the staking rewards of the collateral, well, those extra profits would go into the yield reserve to replenish it, right? So you'd think in theory, it sounds phenomenal. Until we realize that, wait a minute, Anchor has spent over 95% of its existence at a deficit. That yield reserve has rarely ever been actually replenished. And because of that, even though Anchor is only 1 year old, since then, TFL has had to replenish the yield reserve twice now. First on July 14th, 2021 for $70 million, and just recently on February 18th, 2022 for $500 million. And as I make this video right now, Anchor is running at a daily deficit of $4 million. That means in just 1 month from now, they are going to burn an additional $120 million out of the yield reserve. And right now, that yield reserve sits at $420 million. So my personal guess, in less than 3 months, that yield reserve will once again be completely depleted. But how is Terraform Labs able to continue replenishing the yield reserve for hundreds of millions of dollars? Well, TFL has about 300 million Luna in its wallet, okay? That comes out to a market price right now of $26 billion, okay? That is TFL's war chest, $26 billion. That is why them coming in and replenishing that yield reserve with 500 million doesn't sound like a crazy thing for them because they have that much more to kind of rest on. But how did they manage to have such a humongous war chest? Well, the answer to that is pretty simple. From the price of Luna going up. Think about it this way. Right now, Luna is at $85, right? But imagine if it was only at $1. Then instead of them having that, what was that $26 billion of war chest, they would only have 300 million if Luna was trading down at $1, okay? So come in 2-3 months when that yield reserve is once again depleted, they would have to go through their whole wallet just to throw 300 million in, which would be considerably less of what they just deposited in a month ago, right? So a lot of this stems in the fact that Luna is a pricey asset right now. It's trading well at $85. So let's circle all of this together. People want to deposit UST into Anchor for the 19.5 yield, so they do so. That demand for UST that people are buying to put into Anchor, well, that's pushing up the price of Luna because Luna's being bought and burned at the same time. Well, Anchor is not sustainable. And as more people come in, it's even less sustainable. So Terraform Labs is kind of forced to have to replenish the yield reserve. But fortunately for them, when people were trying to get their hands on UST to bring it into Anchor, they ended up pushing the price of Luna, meaning that Terraform Labs' war chest of 300 million Luna is now worth more today than it was yesterday or a month ago. So ultimately, Terraform Labs does not really have to burn that much of their Luna to mint more UST to put into the yield reserve because their Luna is now worth more than it previously was. So the music keeps on playing. Do you see where I'm going with this? Do you kind of see where the second point of the Ponzi characteristics kind of come in here? So as long as TFL is able to attract more money to Terra, that will lead to higher prices of Luna, which allows their war chest to continue funding this cycle that we've been talking about. Since 70% of all the UST that's being minted is going into Anchor, that is why people are pointing their fingers at Terra and saying that is a Ponzi because of how much dominance Anchor has on Terra. Now, is TFL and Dolan aware that Luna UST have Ponzi-like characteristics? Of course they do. It would be naive to think they do not think so. But fortunately for Luna investors such as myself, possibly you, we've begun to see them take some action to reduce the likelihood of all of this kind of crashing down on us. So one of the main reasons as to why a Ponzi ultimately fails is when investors start redeeming their investments. When it comes to Terra with UST and Luna, investors redeeming their investment will be akin to them swapping out of UST, which would happen if Anchor was no longer paying that attractive 19.5% yield. If all of a sudden that yield had dropped to 3-4%, a lot of money might be leaving Terra because people are like, wait a minute, the yield from Anchor is not that great. I can go to this centralized exchange and they're giving me like 6, 7, 8% on this other stable coin. And if there's too much selling of UST as people leave the Terra network, well, that's going to cause UST to go off peg, which we then know leads to the minting of Luna and subsequently the selling of Luna, which brings down the price of Luna, and it could lead to a death spiral where Luna continues to be sold off, well, minted and being sold off in an attempt to try to get UST back to its $1 peg. So TFL, or more specifically an arm of TFL, LFG Luna Foundation Guard, they've begun to focus on this exit risk. For the past month, LFG has made numerous announcements of purchasing BTC that will be used as a forex reserve for UST. In other words, during troublesome times when USD is under $1, LFG will allow people to burn their USD, and instead of minting a Luna, they will then be able to redeem a BTC. By doing this, they're trying to reduce the risk of a price spiral and lessen the effects of USD unpegging for Luna holders. As it stands right now, $2.2 billion has been used to purchase crypto assets for the Forex reserve, which comes out to about 15% of the overall market cap for USD. Now, I believe that LFG will continue to procure more and more non-Terra related assets for this Forex reserve. And as they do, it will reduce the risk of the price spiral between USD and Luna. Now, Doan just recently did make a tweet where he did say that, hey, listen, in the near future, at some point, Anchor's interest rate will become a variable rate, which is good to see. It's obviously showing us that Doan is not blind to the idea that Anchor cannot currently run the way it's doing. And the fact that they're willing to kind of come down and bring it to a variable rate in the future, that's also going to reduce the shock and awe that could occur one day once everything starts crumbling down. But as a Luna investor, the biggest thing that you want to keep on tracking right now is what are people doing with their USD? We do not want to see a Terra world where 70% of all the USD is within Anchor, okay? We do not want to be seeing that. We want to see that USD going to other dApps on Terra. There's dozens of different dApps on Terra right now. There's going to be hundreds coming out throughout this year. We want to see these other protocols attracting money away from Anchor. Because guess what? If Anchor was only responsible for having 5% of all the USD that's ever been minted, people would not be pointing a finger at Terra and saying, wow, that's a Ponzi over there. They wouldn't be doing that. They're doing it though, because 70% of all that USD is currently involved in a financial model that is by far not sustainable. Now, if you have a different point of view, just let me know in the comments below. I'd love to have a discussion about this. This is just my point of view on it. And if you did enjoy the video, just throw it a thumbs up. If you want to see more Terra related content, you can always subscribe. But other than that, thank you so much for watching and have a great day.